What's up, everybody? Welcome back to Earn It, Save It, Invest It. This is week 23 of my $100,000 challenge. This week was a bloodbath. If you were part of the market, you will know. So I'm going to go over what happened in the market, how my portfolio is performing, what I think is going to really happen to the market now that we kind of had a little bit of a speed bump, right? And just kind of go over everything, what the market's saying, how the market's feeling, what investors are kind of feeling, kind of go over everything. So this is week 23 of my 100K challenge. Please give a like and subscribe. I really appreciate that. Let me get that boom right there. Let me get that graphic. And yeah, let's just break this down really quick. So my 100K challenge right now is, as you can see, it is at $8,662.73. It went down about 1% over on Friday. Throughout the week, like I said, it was a bloodbath, specifically for a few stocks, right? Celsius went down 31% in the week. Hasai went down 11%. We have TQQQ and HIMS, both my top weighted positions, right? Like they're both right here, and they both went down about 10% on the week, right? So everyone went down except for Amazon, which Amazon actually had a boost up, and it came back down to reality, just along with everyone else, really. And then Fubo, actually, their deal with Disney went through, and yet it's still only at a 2.65 for the week. So you could tell that the market is definitely not feeling good right now. And I was calling that something like this has to happen. It's happening a little bit later than I thought, but that's why you don't time the market. You just have time in the market. So I did know HIMS was going to go down. I was calling it. I was saying, look, HIMS, it's going to probably crash in October. It has really heavy months of just big double-digit. All of 2025, it's hit about 20% on average throughout the whole year, whether up or down. And so I just felt like HIMS was having a good month, a month and two before that. So I'm like, you know what, HIMS, it can't do it. It's not going to go again. So it dropped about 20 to 30% over in October, and it's continued that drop. And then Celsius again, like I said, that one went down a lot. So it's been kind of a bloodbath. For my 100K challenge, these are all the weeks that I have, right? I started off with $7,354. I make $50 deposits a week, and my goal is to have 20% compounded annual growth rate per year. So this is the goal that I have to, I'm trying to get to every week. And this was my account balance. This is how much I actually had, and this is the percentage, my performance of that week. And I guess I don't know why it says I went down this one. This one I have to change, actually. This one, obviously, I went up, but I think because I started it, yeah, this one's a little messed up. But all the other ones, right, up 6%, up 7%, which is really good. I did this math wrong. I know what I did wrong. But all these other ones, right, I was up 6%, week 14, 15. I was having some good weeks. This week, I'm down negative 8.29%, right? That's pretty significant. I said around week 21 or 22 that I was probably going to go under this, possibly even 8,600. And where am I at? I am at 8,600. This is exactly what I was saying is going to happen. The goal is to not be scared, to not freak out, to continue to deposit money, to buy high quality stocks. And when I start getting boosts in the portfolio, I'm going to run right past that goal again. It's just sometimes you're going to have, pullbacks and corrections and crashes, and sometimes your portfolio is going to take a hit. As long as you have it set up and it's secured, the foundation of your portfolio is good, then you can continue to make gains over the years, right? This is a long game. This is a very long game. This is not short term. I mean, we're at week 23. That's less than half a year. So I'm not even going to start making any assumptions or anything, right? But right now I'm currently at 17.8%. in performance. This is not actually including. I'm actually gonna have to readjust. Oops, I'm not showing you. These are the numbers. This is my what I am towards the goal, right? So right now I'm negative 5% against my goal. It's the first time I was ever negative of the goal, right? I was always above this goal, always, even if it was just a little bit, right? Just a little bit, just by 0.63, but I was always above it. This week I'm actually under it. And then this is my portfolio performance since June 2nd, but I actually just realized I need to readjust this formula as well, because it is not including my $50 deposits, which I guess at that point, it shouldn't. It should be just the whole portfolio. So yeah, this math is right. I'm at a 17.8% right now in total since June 2nd. So that's okay, right? I'm at a 17% for half the year. That's not a bad performance at all. To see what the investors are feeling, I like to look at the AAII sentiment, and it's the American Association of Individual Investors. And so, as you can see, a couple of weeks ago we were at a very bullish stand, and I said, I was like, this does not feel good. When we hit this doesn't feel too good, and we pulled back a little bit this week. The 1 year high was almost at 50%, and we hit close. We're at 44. We're 5-6% off. The historical averages are about 37.5, which is where we're at now. So that's good. That's good to see. The question is, this week's question is, what do you think about the Reserve decision to cut rates by 0.25 percentage points? A lot of people are saying it was the right move, and they should have left it unchanged. That is surprising. I would have gone with they need to have cut at least 0.25 more. Right? And the inflation rate versus the Fed funds rate, it's too lopsided right now, but what do I know? We're in the fear and greed index, we are now in extreme fear. I did not think we'd get there I did think we'd get there once we start hitting this correction or a crash. So now that we're hitting extreme fear, that's good, but it's also like, how much further do we have to go down, right? I mean, this is not a correction. We haven't gone down that much at all. So why are we in extreme fear, right? That's a little interesting that we're already at extreme fear. We can get a lot lower. I remember when it got to 4. It got to 4 this year because of how bad it was with the tariffs and everything. Everyone was so scared. And it got down to 4. I remember that. I'm like, wow, that's the worst it's ever been. And we boomed right out of it. So fear means nothing. Most of the time, to be honest with you, fear means to buy. And extreme greed doesn't mean to stop buying. It just means maybe you should not buy as much as you have been. So that's the fear and greed index. Now I'm going to go over some stocks here. Let's look at the Qs. I don't know why it's not loading. Oh dear. I don't know what just happened there, but I'm going to get this stock chart going right now. Here we go. Why wasn't it showing it? Oh man, this is really messed up. I am not being able to show my stock charts right now. This is really messed up. I don't know what's going on. Yeah, this is a little messed up right now. Sorry, I cannot, for some reason. It's not showing me let's try this way. There we go. Okay, so what about this? Ah, there you go. Like and subscribe, please. Okay, sorry for that delay. All right, let's go to TQQ now. Check it out. Check it out. I knew we'd have some kind of correction. I was actually looking at the Qs. This is where I thought the correction would happen. I was assuming about. I was calling for about a 10% correction, 10% or more like a 12 to 15 possibly. We have now hit. We're at a 4. So we still have a ways to go from here. If we want to keep going to where I was saying a 10%, we're looking, right around here. This is where we should end up. So, I think if we do, we end up right around here, right? Let's say we end the year. We just end the year like this, right? We end the year bad, and then we just start 2026 good. That could possibly happen. This is a 10% drop over 57 days. That's not unheard of at all. This was a 24% drop in 47 days. We have a 15% drop in 25 days. The drops usually happen a lot faster, and then the recoveries take a little bit longer, but we always recover. So looking at the Qs, it seems like, okay, we might be breaking for something here. If we break at all below, I think this mark right here, the 611, that's we're already there. We're at 609, but I'm talking like if we had all have next week down here, that's going to be some bad news, I believe. TQQQ is it's a 3x exposure. So if the NASDAQ goes up 1%, this will go up 3%. So it's a little bit more dangerous, a little bit more volatile. But I also watch this a lot, and I am a shareholder. It has now gone down. Like I said, the QQQ went down about 4%, so this is probably about 12.5%. So, we're starting to look at some cracks in some of this stuff. And, when we look at, there are some stocks down huge. I'm just going to go through. I know. So we had Sweet Green. Celsius was down tremendous. Look at this chart. Look at this chart. Look at that. If you don't see this as a buying opportunity, I don't know what you see it as. The thing about Celsius, too, their business didn't change. Nothing changed. In fact, they literally just said, we're going to get better. We're going to fix things. Now, there might be a slight speed bump in the fourth quarter, but that speed bump is going to lead us to a better road, a way more paved, solidified, just better road. And it crashed. No reason why. I guess that's the reason why, but that doesn't make sense to me. So I would say Celsius is a buy at this time. Cake also has been going down a lot. The first time it saw these prices was October. Oh wait, hold on. No, I'd seen these prices for a little while. Let's look back at Cake. First saw these prices in 2013. Right? Think about that. Cheesecake. 2013 saw these prices. Then it continued to go up, and then it crashed pretty heavily. Wow. Throughout, all 2017, 18, 19, all the way to COVID, it was crashing. And then it had its big, like everyone else, their big pop with COVID, and then it fell down in 2022, of course. And then it was on this tremendous run, and now it's falling again. Cheesecake's numbers, their potential, their business model, their growth perspectives, I think that this is a buy at this time, at this price right now. It's at 47. I don't think this, as you can see, this, it goes up and down a little bit throughout these last, now we're talking 7-8 years. It hit this price in 2013 though, right? We're talking almost November 2013. That's 12 years ago. 12 years ago, it was at the same price. Oh, I'm not even showing you. Cheesecake, right? Look at this. Cheesecake, in 2013 right here, $47. That's where it is right now. Now, it obviously went above this line a few times, and it also went down. Now, these down times, I don't even exactly know, 2018, 2019, all through 2017. That was just a bad time for Cheesecake, obviously. And I wasn't a follower of the stock at that time, so I can't really make any comment on that. But I do know during COVID and everything, the restaurant businesses, everything exploded right after COVID. And then 2022 hit, the inflation, interest rates, all that stuff, consumers. And then it started to come back. And now it's hitting this big dip again. I just don't see it continuing to go much further. They have a good dividend. They have great revenue, great net margins. So, and their growth perspectives. They have some new restaurants coming out. They're going to build a lot of locations. So, anyway, that's just this is a quick video of week 23 of my 100K challenge. I'm down big, but it doesn't mean I am at all discouraged. I think that the market's going to be giving me some really good discounts, and I'm planning to take advantage. So I will be coming up with another video probably this week about the stocks that I'm looking to buy in the next week or two, in November. I did have a video earlier for stocks to buy in November. I'll probably go over those stocks as well to see how they're performing, but it's been a bit of a bloodbath lately, and I love it because, if you've ever heard the saying, you're going to catch a falling knife, in terms of stock picking, you're like a cheesecake or something where it's like really going down. You're like, do I want to, this thing's a falling knife. It's just falling down and it's just cutting up everybody involved, right? Well, if you catch it I don't want to say at the right time, but kind of, right? You don't want to catch a falling knife when it's just starting its fall. You want to catch it. Okay, this knife's been falling for a minute. I'm gonna put my finger out, right? And then you put another finger out, and then you put another finger out, and then eventually you get your whole hand in, and then you realize, oh, I just caught the knife safely, right? So you don't want to go all in right away. You want to make sure you know what you're doing, but at the same time, it's good to catch falling knives if you can do it correctly. So I'll be looking to catch some falling knives here in this next few weeks because it seems like there might be some. But I don't want to go too heavy in case we still continue this correction a little bit. So we'll see. But anyway, yeah, thank you for watching. Go ahead and please give a like and subscribe. I really appreciate it. And yeah, keep earning it, saving it, investing it. Don't be scared. Be prepared. And never forget to earn it. Okay, I don't know what's going on right there. Let's try one more time. Don't forget to earn it, save it, invest it, buy low, sell high. I want assets, not liabilities, and you can count on compounded interest.